Hello traders, if you want quick gold trades without staring at charts all day, this strategy will help you to get quick trades with a higher probability entries and clear risk management. So now watch this video and you'll be able to know the only gold scalping strategy that you need in 2026, guys. So now this is a trend following strategy, guys. So now this one, when you really follow the trend, you know gold moves so fast, so you have to trade it with a trend. When you really follow it with a trend, you'll get low risk to high reward trades. Okay, so now this one, guys, for example, when you really indicate your low, because now this was a bullish market, right? So now for the bullish market, when I identify my low, for example, right here, this is the low that I have identified. Now this one will work as a support level, and at the same time it will work as my low, right? So now here you are expecting the market to buy and passes this high. Remember, there was a high that was resting right here, guys, right? So now this high, it is here. This is the high that was resting right here, guys. So now when the market actually bought, it bought and passed this high right here. And when it passes this high, you are expecting the market to retrace. You're expecting the market to retrace. Now we have this low. Either the market comes back to this low and it liquidates, it closes above this low, or it just turns from our order block to a fair value gap. Now the zones I'm going to show you, the order block zone and the fair value gap zone, that we shall pay attention to this market, right? So now here you can see that when the market actually broke this low, this high right here, it retraced. When the market retraced, guys, when the market retraced, it actually came back to an order block zone right here. Okay, so now you can see that when the market came to your order block zone, it has bought again right here. Okay, so now these are the zones that hold the market tight, right? So now when you really follow these zones, you get high probability setups, guys. So now here, when you really see another example right here, there was a high right here, okay, and this high actually was broken, guys. That high was broken. The high I'm talking about is right here. Okay, so now the market came and broke this high. Remember, when the market breaks the high, we are expecting it to come to retrace to our zones. Now the zones that we shall be talking about is, remember, now this is the high that we are talking about. Now we are expecting the market to either come and break this high. When it doesn't break this high, it will liquidate it and closes above it. Because it has broken the high, now we are expecting a retracement. This is the retracement it made, right? You can see the retracement it made, and when it made that retracement, actually, we're expecting it to come to this order block or this fair value gap. Now today it used a fair value gap, guys, right here. You can see that when it reached that fair value gap, you can see the move that the market made, guys, right? So this is another zone that the market used, guys, right? So now it made another break of market. So now it will just move like that, come to your zone, go back like that. So now your role is to know which fair value gap is high probability, which order block is high probability. So you can watch the videos I made about that, guys. So now these entries, now that is a bullish trend. Also in the bearish trend, it does the same thing, guys, right? So now here in the bearish trend, you can also identify the break of market structure. How? You can say that this is the break of market structure right here. So when the market breaks the structure right here, that is the structure the market broke. Then here it created a high right here, lower high. So now the market, it can either come and break this lower high and go up, or it has to come back. It has to retrace to our zone. Now, one of the zones the market has to resource to is an order block zone. You can see that when the market actually retraced your order block zone, it made another move. It made another sell that we are talking about here. When it tapped in our zone, now it sold, guys, right? So now this one, it is a trend following the strategy, guys. You can see that this is another low right here. And this look, guys, when the low was broken, now we are looking at this high. This is the high the market that made, guys, right? So now we are expecting the market either go and break that high, or to either retrace to our zones. Now, one of the zones that the market retraced to is an order block zone. You can see that the market actually uses order block zones to move, guys, right? Because order block zones hold a lot of orders. When big banks, when institution traders actually, they leave order blocks, they leave supply and demand, right? Because that's why the market has to come back there and actually move again. Now, if you really follow this strategy, you'll get low risk to high reward trades, guys. So now here, one of the mistakes most traders are making is not waiting for the market to tap their zones. You have to wait for the market to come and tap your order block zone off your value gap. Then you get any confirmation that you are using. Traders are using very many confirmations. You can go to lower time frame, like 1 minute time frame, 3 minute time frame, to get doji candles, engulfing candles, or even a change of character, right? So now, guys, you can use all that to trade this gold market, guys. So if this video has helped you, consider subscribing, give a like this video, share friends, so as you can also benefit, guys. Bye.